Sure. So we are already live, Dr. Abhishek, and we'll start the session with your permission.
Hi, thank you. Thanks, Amit. Thanks, Amit, for inviting me. So it's really great to see such a big turnout here. So
Right.
yeah, please, all
Yeah,
yours.
yeah, sure. So first of all, thank you so much, and I heartily welcome all our investors who have joined on this, Saturday morning call. Welcome to this 7 sessions of Niveshako se Samwaad. Okay, in the past we have discussed on the blockchain technology, artificial intelligence, various sectors, real estate. Last time, India growth story, and this platform day by day, month on month basis, it really getting a lots of popularism. Good feedbacks, constructive feedbacks, and this time we are going to discover about the pharma. As I say, it's Samwaad, Niveshakon se Samwaad, and Samwaad is always a two-way dialogue. Okay, so Dr. Abhishek will definitely, he's a veteran, and I'm sure it's my honor to introduce him. But whatever the questions you have, okay, please drop those questions in the Q&A. So 30 to the format of this session is around 30 to 40 minutes. It's a Q&A session. Dr. Abhishek will answer those Q&As, and of course will answers all your queries after that. Let me take this honor to introduce Dr. Abhishek. So, Dr. Abhishek joined Jefferies India in September 20 as lead pharma and healthcare analyst. He has a 21 years of industry experience spread across all aspects of pharma and healthcare, including corporate, buy side, investment banking, and sell side. Prior to Jefferies, he spent 6 years with IIFL covering the sector as a research analyst. He is an MBBS from Maulana Azad Medical College, Delhi, and MBA from IIM Indore. What a super combination, Dr. Abhishek. And it's really a host, Dr. Abhishek, first time. So quickly get me to the first question. Do you think pharma is a defensive which can be looked at in the current market environment?
Yeah, sure. Thanks, Amit, for that kind introduction. I hope I'm able to answer your questions as well as the audience questions to the best of my abilities as we go. So clearly, I think the conventional wisdom has been that investors, both on the retail as well as institutional side, have looked at pharma as a defensive. And whenever market tends to turn volatile or we are heading into tough economic environment like right now, there has been a tendency to look at pharma as a sector where you can hide or you can, sort of start parking your excess in equities. Now, I think while that still holds true for part of the business that pharma is all about, which is the India piece, which I think is a true defensive. The demand doesn't destroy. The government allows for price increases every year, and it's a very good high gross margin business with very decent ROCs. The other parts of the business for the pharma per se are have seen some bit of volatility for the last few years, and I think the most important one that I would like to highlight here is the US generics piece, which has seen, I think, a very long period of generic price erosion. I mean, as far as I remember, it started somewhere in 2015, and uh, di- only but for a short period of brief respite at the beginning of COVID, we have continued to see generics price erode. It has been a kind of a structural decline, which obviously, does not really get affected by economic cycles, but it has just been a one-way street down. So I would say that yes, India business is a good place to hide, too defensive in this environment. But US generic names are continuing to seeing a struggle, which is not related to economy as such. One more part of sector that we partly cover, we have some coverage there, is hospitals. And I believe, that is again one true defensive sector. As we go forward, the demand for branded hospitals in India is only going to increase. And there is definitely a demand supply gap at the top. because of which we are going to see some of the names that we cover will continue to add beds. In fact, most of my coverage is already talking about adding beds as we go. So that is one part of sector which again can be called as a true defensive with secular growth characteristics going forward. So sorry for the long answer, but I just wanted to set up some context as we start. That India branded pharma is one area which I think is is a is a good defensive. It has got good defensive characteristics, and hospitals is another area which one can look at. There is one more piece that we cover and which has become relatively large in the form of, in terms of market cap. This is you can term it as CRO or CDMO space, contract research organization, CDMO companies like Divi's Labs, Syngene, and again, so the business characteristics are completely decoupled from economy. These are more a proxy on innovation play in Western markets, because ultimately, their business feeds into the innovation business of big pharma companies or biotech. So that is one area. Another area that one can look at, some parts of it will definitely continue to see secular growth characteristics, and I can sort of highlight as we go forward. So I would say yes, largely secular growth characteristics do exist as we speak today. The only part of the market which I'm a little concerned about is US generics. But apart from that, it should have defensive characteristics. Yes.
Okay, and thanks. The next one is, what's your view on the emerging threat to Indian pharma companies from e-pharmacies? I mean, do you think emergence of large e-pharmacy companies poses a threat to the market structure? Can they coexist?
So thanks, Amit, for that question. This is a question that I get asked very often, even from large institutional investors. So clearly, it is on top of mind for people who wish to invest in India pharma market. Now, if I were to just take you through the structure of the Indian pharma manufacturing and distribution for the local market, it is very fragmented. So that the largest company here is Sun Pharma, which is about 8.5% market share. The second largest is 6.5%, which is Abbott. And then, it just drops like 4%, 3%. Top 25 pharma companies will account for 75% of the total pharma market. So, and then there is a very long tail which accounts for the remaining 25%. So the manufacturing and the marketing part of it is, of course, somewhat fragmented, but the distribution is, if I may, is even more fragmented. So I think there are some 100,000 pharma distributors in the country, and there are 800,000 retail outlets, pharma retail outlets in the country. If you compare the middle piece, which is the distribution, where we are talking about 80,000 to 100,000 distributors, and when we compare that to US, there are only 3 large pharma distributors in the US, which account for 100% of distribution. So with the advent of tax, seamless tax structures like GST, etc., there is an expectation that the distribution of the middle part of it will start getting consolidated very quickly. And I believe that as e-pharmacies grow in scale, they will either have their own middle end or distribution, or their purchase their purchases will become meaningful enough, right? So right now, for example, if you're talking about 100,000 distributors, nobody has none of these distributors have such a big wallet that they can start pressuring the domestic branded pharma companies or Indian pharma companies to give them more discounts, right? I mean, because each of their wallet is very small. But let us suppose that tomorrow we have pharma purchasers or distributors or retailers who start becoming big enough that they start buying, let's say, $1 billion worth of medicines from pharma companies, then they become very meaningful, and then they can start driving or pressuring Indian pharma companies to provide them with more margins. So that is one threat that we see to this market, which is a non-regulatory threat. It is just a simple competition dynamics which can play out. Just to give you some perspective again on number, when I speak with numbers, India pharma market would be roughly about $25 billion in market size today, and the largest purchaser now is a sister company of Apollo, which is Keymed, which I think would be about $1 billion in purchases every year. So there we already have now one company which is doing $1 billion in purchases in a $25 billion market. And just giving you approximate numbers.
Okay.
And the second largest purchaser, who's a distributor, again, Keymed is a distributor. The second largest would also be, I think, would be in ballpark of $500-600 million. So we are now seeing some consolidation of pharma purchasing which is happening, and it will only get accelerated with the help of e-pharmacies, because e-pharmacies business will operate at scale. They have a digital front end, so they can scale up very quickly in terms of their pharma purchasing, and that's where essentially we will see some of this pressure coming from. So my bet is that in 5 years time, because of emergence of e-pharmacies, or as they grow bigger and bigger, the distribution will also get consolidated. And I mean, if any of the audience wants me to elaborate as to why I think why that has happened, you can raise your hand and I will try to answer it in more detail. But just moving forward, I think and as distribution or pharma purchasing gets consolidated, then that will put a negative or downward pressure on pharma company margins. But so clearly there is a risk that we see on the India pharma companies. There is just one challenge to this entire thing. So Indian branded pharma companies have enjoy great relationship with doctors. Doctors are ultimate prescription writers in India, and customers swear by what doctor has written. So if doctor has written a particular brand of medicine, patients are very unwilling to change. Patients are quite unwilling to change that into something which is some other brand name, some other company's name. So for example, if doctor wrote a Cipla brand name, and the chemist or the pharmacist tried to give a Sun or a Torrent brand name saying that this is the same medicine, you would still not, the patient will be very resistant to that change. He will maybe go to the next pharmacist and try to see if he can obtain the same brand that the doctor told him. So the brand still has a very strong role in the customer mindset, and beyond the point, I think e-pharmacies do not really have the power to change that prescription mindset. So if Cipla or Sun or Torrent, any of these big companies are able to command brand loyalty amongst the prescribers, then the e-pharmacies will have no option but to stock those medicines. They can't really say that e-pharmacies can't go back to pharma companies and say that if you don't give us discount, we will not stock your product. So clearly, because the demand is still being driven. So there are pressures and counter pressures, but my sense is that in 5 years time, I do expect that pharma purchasing will get more consolidated. We will have large pharma buyers, maybe e-pharmacies themselves or pharma distributors, and these will start exerting some sort of a pressure on pharma companies, saying that if give us at least volume discount, 2%, 3%, 5%. I don't know what that number is going to be, but definitely that can put some sort of a margin pressure on pharma companies going forward.
Okay, thank you so much. My request to the audience is, as this is a very limited time, whatever the questions you have, please type that in Q&A. Next one is a few minutes back, you just mentioned about the US generics erosion. So what are your views when, by when will the US generics erosions end? And what are the factors that drive the erosion?
Okay, so that's an important question, and unfortunately, no one knows. What I can do is I can try to tell you what I think about why erosion is there, and my view is slightly different versus the rest of the market. So obviously, the core issue here is that now there are only three big buyers um, in the US for generic products. Very similar to what I was just telling you, that it can potentially happen in India, that right now there are so many pharma buyers. So that's why pharma companies enjoy a lot of pricing power. Tomorrow, if that number reduces to three, then you can. So that same thing has happened in US. There are just three big pharma buyers. These were six or seven. Now they have become three, six or seven. Like 7-8 years back, there used to be six or seven buyers. Now there's just three. And so that is only one part of equation. The other part of equation is on the supply side. The supply side has also supply of medicine, generic medicines to the US market has also increased substantially. If you, let's say, I'm sure many of the audience here, if they have been through some of the pharma cycles, they will realize that in 2005 there were possibly only Dr. Reddy's and Ranbaxy who were supplying generic medicines to the US market in a big way. Then by 2010, you had Dupin, Cadila. And then now in 2020, you have, at least 20 large pharma companies in India, which is listed, unlisted. On the unlisted side, there is Hetero, MSN, and so Aurobindo on the listed side. All these people. So now there are at least 20 meaningful suppliers from India to the US. So the supply has also increased, and that basically means that while buyers obviously were always willing to exert pricing pressure on on the manufacturers, there were so many manufacturers that they were also willing to supply at lower prices, and that I think continues to be the case as we go forward. If you ask me if we are close to utilizing all the capacity that Indian companies have put up for the US generics, and once that capacity gets fully utilized, then after that there will be no further generic price erosion. That is obviously that is possible, but I really think that we are still far away from that kind of a scenario. There are a bunch of companies in the generic space, the companies that we cover, Dr. Reddy's, etc. All these companies have now kind of reduced their capex spending on the US. Everybody, I mean, across the board. I think I just took one company's name, but just, I mean, across the sector, if I see, the capex spending has gone down significantly versus, let's say, the peak of 2016 and 17. But my sense or my idea is that we are still sitting on a huge amount of underutilized capacity, and that can sort of continue to sort of absorb all the demand that is coming up. The third aspect that we need to know is that what is the generic volume growth in the US market. So how quickly can this capacity get absorbed is a function also of generic volume growth. And the generic volume in US only grows at 2 to 3% per annum. So clearly, at that kind of a low rate, it may be a long time. I think before we will see this capacity getting absorbed, there will be some capacity that can actually be taken out. Some companies may just lose interest in the market, saying that it is not viable, the margins are getting very low, or it doesn't make sense from an IRR or ROC perspective. Let us divert this capacity to some other market. So, or you may say that I build this capacity. A pharma manufacturer may say that I build this capacity, let's say for US, but let's now partly use it for Germany or Brazil or any of these other emerging markets. So that could be one way in which you can start utilizing the capacity. But of course, if you build the capacity for a US standard and you're trying to utilize it for any other market, clearly your ROCs will be below, because for US you build to a higher standard. So capex and opex both are much higher for a US related facility. So I really think that US generic price erosion is here to stay. Buyers somewhere there is we always hear in the background that there is some appeal to the economic rationale, that if buyers exert too much pressure, then there will be drug shortage, and there will be all those kind of things, and people will exit the market. And while we are seeing some exit on the margin, some people have gone out, or some capacity has got diverted, it is not really happening on a large scale. We're still seeing companies remaining committed to the US market. They may not be doing more capex versus earlier, that is a fact, but they remain committed with whatever capacity that they have built. So nobody is saying that let me just get out of the US market and I will not do this anymore. So that kind of discourse is still not happening, which makes me think that I think generic price erosion can continue for some time. Of course, it will be cyclical. There could be right now we are sitting on a very high rate of generic erosion. If I understand, comprehensively speaking, there was low double digit or maybe mid double digit kind of a price erosion in 4Q and 3Q. Maybe going forward it falls to 8-9%, and then it possibly even goes down a little more, 6-7%. But is it and then it can again climb back as new capacity comes in. So all that can happen, but I don't really think that it is going away and we are going to get into an inflationary environment anytime soon.
Okay, thanks. I think that was a very comprehensive answer. In the beginning, you mentioned about the hospital stocks, and we have seen that hospital stocks, they have outperformed the sector in the last few years. So what has led this outperformance? If you can just throw some light on it.
Sure, thanks, Amit. Yeah, so hospitals is a sector which has emerged in the last couple of years, from I would say from a very in the shadows kind of a sector. It was largely generics, and nobody used to really bother so much about hospitals. Partly the reason for that was that there was only one large cap listed company, which is Apollo Hospitals, and beyond Apollo Hospitals, there was no other listed hospital, or if there were listed hospitals, they used to be very small. They tended to be very small. In the last few years, either in case of, for example, in case of like Max, we have seen a separate relisting of Max Healthcare. In the case of Fortis, we have seen a change in management. And in case of other names like KIMS and Rainbow Children, there are other new hospitals which have got recently listed. So the investable space has significantly increased versus what it was even a few years back. 2014, I think 2014-15, there was only Apollo, which was the investable name. Now there are 6 or 7 investable names in this sector. So clearly that is one thing that has driven the investor interest in this sector, although Apollo still remains the largest. Now with the emergence of other names, what has happened is that I think so obviously investor awareness goes up, because every hospital company is giving their own perspective on the market as well as their own business model. But the other thing that has also happened with so many with the expansion of investable spaces, that now all hospital chains are also focused on improving their efficiencies. And what we have seen during the COVID years is that the margins for the hospital companies have like really shot up, really gone up. This is because the hospitals, everybody, large cap, small cap, mid cap, have tried to sort of focus more on improving operating metrics. If there are whatever cost efficiency metrics are there, you basically try to bring those in. Focus on cost, dynamic staffing, renegotiation of contracts, etc., wherever you can squeeze. And I think that has led to a very massive, I would say, a positive move in the sector, that it has tried to become much more efficient. Margins have gone up. So for example, Max, if I may just give you, I mean, the margins are up like now to 25-26% on an ongoing basis. EBITDA margins I'm talking about. And other hospital businesses likewise have also seen an improvement in margin. The ROC profile for this sector, which always used to be a concern, people used to worry that this is a single-digit ROC sector. We are now seeing across the board again, including Apollo, etc., an improvement in the ROC profile of the sector. And my limited experience tells me that when the ROC profile for a sector improves, the investor interest goes up significantly, because that just tells you more about sustainability of business model, sustainability of earnings, etc. Now, on the demand side, I think when we were all growing up, 20-25 years back, there were not so many private hospitals around. The first preference used to be to go to the government hospital, whichever is the nearest. But unfortunately, because the government of India doesn't spend so much on healthcare, we hear a lot, but we don't really see them spending on healthcare. The state of government-sponsored healthcare in the country has gone down significantly. The same hospitals that we used to go to 20 years back, I think, are now not in such a great condition. So the tendency, even for the poorest of patients, and I'm not only talking about the audience here, I mean, which are obviously all very well-to-do people. We can all go to private hospitals. Most of us will have health insurance. But I am also talking about the poorest of the patients. The tendency or the preference now is not to go to the government hospital, but to go to a private hospital, simply for the quality of care that you receive in the facility, more hygiene. And of course, I mean, there are other factors also. The branded hospitals, the ones that we cover, obviously are not catering to the poorest of the poor. For that, there is Ayushman Bharat, which is the central government scheme. And then there are empaneled hospitals with Ayushman Bharat. Bulk of these patients will be in tier 3, tier 4, which is not where most of the branded hospitals that we speak about are today. The branded hospitals are essentially focused on clinical excellence. So if there are complex cases, if there are difficult to handle cases which mid-range hospitals cannot handle, those kind of cases, you go to the top clinician. And typically today, the top clinicians in any city are working for a branded hospital. So that is one. Then the other thing that I mentioned is insurance, which is like really gone up. And if I have health insurance, I would prefer to go to an Apollo or a Max or a Lilavati, for example, if I'm in Mumbai, rather than go to a mid-range hospital, because I'm covered. So why would I not go to the best possible hospital in a particular city? So that is also driving some of these behaviors. And we expect that the demand will continue to remain strong. These hospitals have become a magnet for the top clinical talent in every city, because the doctors also realize that if they go and work for some of these hospitals or all these hospitals, they will get a better case mix, they will get more complex cases, and they will be able to sort of kind of grow their practice along with the hospital. So it's a symbiotic kind of a relationship, and that's where I think the branded hospitals will do very well over the next 5-10 years. Of course, again, there's a capex cycle which is there in the hospitals. So some right now, like I said, all the hospitals are in the phase where they are looking to build hospitals beds over the next few years. So we'll have a capex cycle, and then that capacity will get absorbed, and then so it will remain like that. But I think the demand is going to be very, very healthy for the next 10 years. India also has an aging population, and that is that is something that obviously always works best for these hospitals. Whether the landscape, competitive landscape, will remain restricted to these 6 or 7 listed players that we have today, or whether there can new business models can emerge which can be even more effective or efficient or in line with the Indian realities, that only time will tell. There can obviously be disruptors in every business. We just spoke about e-pharmacies on the pharmaceutical side. So that is a disruptor. There can be disruption here as well. But as far as the demand is concerned and the underlying dynamics like insurance, etc., is concerned, and the clinical talents move is concerned, I think the hospital space is going to see, I think, next very good 5 to 10 years is what my belief is.
Okay, that's a very interesting perspective. We'll quickly move to the Q&A and just see the questions are being flooded. Quickly move to the first one. Can you please repeat generic versus API? And what about our dependence on China when it comes to the API?
I think so. China API I'll cover. Let me cover first, and I'm sure I'll be able to answer the first part of the question in that only. So there are some API. So India used to have a decent API manufacturing base again 20-25 years back. And basically, but what happened is that China put in a lot of capacity and they manufacture at scale. API is a scale business largely. You need to have scale in order to have a world-beating price. So China was able to put up a lot of capacity which was on scale. I was just speaking to a pharma company recently. Some of you who have been in the market for a long time would recognize. I may not want to take their name, but they had a thriving penicillin facility in India, and then 15-20 years back, the Chinese just flooded the market with penicillin, and this company that I'm talking about had to shut down their penicillin facility because it was just not viable for them to keep functioning. And now I'm told that there is some request from the local operators, or that to this company, that you should again start your penicillin manufacturing facility. But I think there are a bunch of things where China has now attained a scale which Indian companies will find it very difficult to surpass. The most important ones are antibiotics. So antibiotics is something which has to be manufactured at scale, like 10,000 tons, 15,000 tons of API every year. And those kind of capacities only exist in China, very, very difficult to replicate. And if you try to do 200-300 tons at a particular location, just to start with, you will not be cost competitive. So there is no point. There is fermentation. So first is antibiotics. Within antibiotics, I think the older ones, amoxicillin, etc., even the newer ones like cephalosporin, now China is the global leader. Then there are a bunch of things like fermentation APIs, where again, India used to have very decent companies, but many of them have shut down, and now fermentation APIs are all made in China because it's an energy intensive process, and power costs in China are much lower versus India. Now, so barring these, but of course, I mean, from a, let's say, a geopolitical perspective, every country in the world, including India, is now thinking that we should not be dependent so much on imports, and at least the life-saving medicines, whatever they are, 20, 25, 30, a list of 20, 35, 25, 30 APIs, we should be able to make in our own country. US is also thinking like that. Europe is also thinking like that. And India is not wrong in thinking like that, but it is more from a geopolitical perspective rather than commercial. So in order to achieve those goals, which are non-commercial, the government of India has offered to begin with, that is where it started, production linked incentive scheme, PLI scheme for API companies. Although in my coverage, again, not very many people have taken up the first PLI scheme. The second PLI scheme, there were some takers. So I would say that, and then of course the government realized that this scheme works, so they have now rolled it to other things like telecom equipment. Some of those other sectors have also started benefiting from PLI schemes. So that is one part of it. So, but I think the scope of PLI scheme on the API manufacturing will remain restricted simply because it is done from a geopolitical perspective. So 25, 30 APIs, wherever we think that we should not be absolutely dependent on imports or China, we should manufacture them in India. Those 30 APIs will get manufactured in India, right? So that is one. The second is the commercial. Now let me just come to the commercial part of it. So obviously in the last 2 years we have seen that there have been several port closures in China at various points in time, because of which supply chain has got affected, and Indian companies which were dependent on this imported API suddenly were not able to supply in the US market, because of which they got penalized, and it got the penalty is very harsh if you're not able to supply in the US market. It's called failure to supply. So Indian companies, in order to again reduce their dependency on imports or China, they started encouraging local vendors to supply them the key starting material, advanced intermediates. Some of that they were able to make themselves. So the emphasis, even from a commercial perspective for Indian companies, has been that let's try to make as much as possible in India, so that we do not get exposed to this supply chain volatility. And that I think has worked. So I really do not have numbers because nobody publishes these numbers. But when I speak to pharma industry people or pharma traders, my understanding is that our dependency on pharma API import from China, or the ingredients that are used to make pharma API, that dependency has continued to come down, and it has come down significantly in the last, let's say, 2 to 3 years time, but it is still very high. So let's say, if I'm just giving you illustrative numbers, and these are based on anecdotes, that let us suppose that 3-4 years back we were 85% dependent on China. Today maybe we are 65% dependent on China. So it has come down, but we are still dependent to a great extent. Can it go down to zero? Answer is clearly no. Like I said, there are so many things that China makes at scale which is not possible for us to replicate in India. Can it go from, let's say, the illustrative number of 65 to 50 over the next 4-5 years? Answer is clearly yes. I mean, we will continue to move in that direction, but beyond the point, it will not, there will be no economic gains to continue doing that. So, and then of course there are nuances. I'm not a great expert on some of those nuances as to what is it that you can really make in China better versus what you can make in India. And I think those are very company specific things. For example, somebody who is in fluorination, like Navin Fluorine, possibly may have a different advantage, and I don't even cover that company, so it may have a different advantage versus somebody who's trying to build, let's say, phenols, manufacture phenols in India. So those I think are probably better understood by speaking to companies, since I'm not an expert. But overall we have seen a trend of reducing China dependency. It will continue to go down, but it will not go down below a particular level. It cannot. I mean, it just doesn't make commercial sense for it to go down below a particular.
Sure. Mr. Pranav Chawla is asking, how do we see the diagnostic piece of the industry?
So I do not cover diagnostics yet, and I can just give you some very broad thoughts here. and not definitely not speaking about specific stocks. Um, so so now there are so clearly diagnostics has two aspects to it. Okay, the way I understand it, one is the B2C part of it, the other is B2B part of it. B2C is when the customer recognizes a particular lab like a Metropolis or whatever and wants to get himself tested there. And the B2B part is that the customer is still goes into a doctor's clinic um, and or a polyclinic or a hospital, and then the decision to where to send that sample for testing is taken by the doctor or the polyclinic or the hospital institution. So the B2C part of the business is bigger in the cities in India. Customers are much more aware, so they especially the more affluent customer is much more aware. They want to go to a branded lab chain, and that is what is essentially driving the B2C aspect of the business, which is the more sticky part of the business. The B2B part on the other side is very cost sensitive, and because of which we have seen that so because the backend can be done by anybody. So if the let us say the hospital is sending samples to lab A today, and tomorrow it gets better rates from lab B, then it will start using the lab B for their sample testing. So B2C part very sticky, but it again has the same characteristics as branded pharma in India. It will grow at a certain rate, not faster than that, 8, 10, 12%, whatever that number is. The B2B part, which can be scaled up very quickly, is now going to see some sort of a price pressure. I think while I don't cover, I listen to diagnostic company calls, and I think everybody is now shown concern that yes, on some of the business, because of the emergence of e-pharmacies, etc., we are seeing, or we are expecting to see some sort of a price pressure going forward. What we need to understand, and this number again is this is my core belief in diagnostics. I still believe very strongly that diagnostics will do well, and the new competition, just by you cannot purely compete on price in this segment. Why do I believe that? Is, let us suppose that somebody is sick and walks into a doctor's clinic and in the afternoon or in evening. I'm just, time doesn't really matter. The and the doctor writes a test. The patient is is in an urgency to get himself tested there and then, right? So these app-based testing, wherein you basically go and sort of click and seek an appointment, and then maybe you get an appointment for next day morning. The patient typically doesn't have that much time. He's in an even before he buys medicines, the tendency is to get himself tested, because in many of the cases the doctor will say that, why don't you get tested, bring me back the test report, and then I will write your medicine. So the urgency to get tested is even more than urgency to buy the medicine. And because of that urgency, what matters is that as soon as you step out of the doctor's clinic, you start looking for what is the nearest branded lab that you want to go to. So there are all these components are what the branded labs are taking care of. There is a brand. So as soon as the customer, let's see, he walks out to the doctor's clinic, he sees 3 or 4 labs there. He recognizes one because the company has invested in branding. So the patient knows that, yeah, this one is a good one. Then the distribution footprint. So he needs to be very close. It can't be like 500 meters away from the doctor's clinic. That is something again that the diagnostic chains have invested in. And then the accuracy of the test. So it cannot be that you basically go to any lab and then you bring that test report, and the doctor says that where have you got yourself tested? This is a bad result. Why don't you go and get yourself retested? Those kind of things will not happen with, let's say, a Dr. Lal or a Metropolis. the doctor cannot reject. These people have now enough track record of accurate testing that the doctor will not be able to contest. And fourth, so again they have invested in good labs. And last is timeliness, which is that it is not that I give my sample today and you give me the report tomorrow. It needs to be like in a couple of hours. So because the branded diagnostic chains have invested a lot in all these B2C components of the business, I really think that that business is sticky and will continue to grow. At what rate, since I don't cover, I will not be on top of numbers, but I think any price-led competition will find it very difficult to dislodge this current system. So on the B2C side, I am really positive about diagnostics.
Sure. Thanks. Mr. Karan Chopra is asking, can you please throw some light on companies which provide raw material for medicines and their prospects, and tell what raw materials are used in medicines?
So I will not like to talk company specific. The manufacturing chain for pharma is that the end product is something called as a finished dosage, which can be a tablet or a capsule or an injectable. And in the tablet or the capsule or injectable, there is something called as an active pharma ingredient. That is the part of your pill which is giving you the desired biological activity. So for example, if you have a paracetamol right next to you in your study desk right now, you can see that the paracetamol, it will say paracetamol 400 milligrams. So the tablet is 2 grams, but there is only 400 milligrams of active substance which is going to reduce your fever, and that is the paracetamol API. That gets manufactured separately, that gets synthesized separately in another location. It cannot be even at the same location, and it is manufactured in a different manner. Like that part is done through a chemical reaction, whereas the tableting part is just mixing, compression, granulation, etc. So very, very different kind of a thing. So the companies which manufacture finished dosage and API could be same or could be different. I mean, it just depends. So companies like, for example, Dr. Reddy's do everything. Companies like Divi's Labs only focuses on API manufacturing, which they then ship to their clients who will convert it into tablet, capsule, or injectables. So there are all kinds of companies. It's a thriving ecosystem in India. That is one thing that we should definitely be proud of. That India is the manufacturing powerhouse of the world, you name it, right? I mean, whether it is API, finished dosages, some of the key starting materials, ingredients, etc. There are companies which cater to US, cater to emerging markets, cater to India. So we have all this, thriving ecosystem, and there are thousands of companies which are out there, which are involved in different parts of this ecosystem. But company specific is something that many of them are actually even privately held. So I won't even know of them. Yeah.
Sure. The next one is I can't read this name, but okay. Thank you so much, Dr. Abhishek. My question is, most of the companies in oral solids and injectables in US are witnessing price erosion. How do you see that trend shaping up going forward? Just wanted to get some sense on biosimilars business for its key players and the way forward. Thanks.
So the generic erosion part we just discussed. I'll just summarize. I said generic erosion is a reality of this industry. It looks to us that while we have thought at various times that some economic sanity will come in and prevail and there will be generic price stabilization, but going forward, my view is slightly pessimistic. We peaked in 3Q and 4Q of last fiscal, at low double digit to mid double digit kind of a price erosion. That number may have come down, but I really do not expect it to come down significantly to from here on. So we will at least for the next few quarters and over a longer period of time, I do not expect that generic price erosion will go away. So just to summarize, what we discussed, I gave a very long answer to this. Now just summarizing, biosimilars, India has now started moving towards creating a biosimilar ecosystem. For the longest period of time, the large companies that we are aware of, are primarily focused on generics and not working with biological materials or biosimilar. There was only one company, Biocon, which continues to still have the maximum number of approvals in the US. I think three of their products are now approved in the US, which is a significant feat, if you ask me. We also look at some of the global biosimilar companies. I don't think there are many companies which can boast of having three biosimilar approvals. So valuations aside, it's just a phenomenal achievement on part of Biocon, given the fact that there is no ecosystem per se in India of biosimilar manufacturing. Now going forward, a lot of other companies are also uh, talking about doing biosimilars. And yes, clearly there are other listed companies also which have now started investing in biosimilars. Why do you need to invest in biosimilars? Let's just try to address that part first, right? I mean, if the going is good on the generic side, why do you even need to bother with something else? The thing is that in the future, all the products which are coming, pharma products which are coming off patent in the US, a large number of them in terms of market size are going to be biologics. So if you're not creating generic versions of biologics, which is biosimilars, then in the future, how do you continue to grow becomes a question mark. So it is necessary that I think my reading is that it is necessary going forward that everybody will need to have some sort of investment in biosimilars. We have seen companies now making some small moves because it's a very different business. It is first of all, it's a business of capex. I'm sorry, not capex. It's a business of investment. So any product that you want to bring online in the for the US market will cost you $100 million, right? So, and given the fact that when you're committing to that kind of an investment, your approval is only 5 years down the line. On that day, if there are 10 different biosimilar players who enter the market, you will not be able to recover your cost, leave alone generate any IRR on the investment. So it is a risky business. It is high upfront investment. The capex is different, and lastly, the capabilities are very different. So if you are a very good generic player, it doesn't necessarily mean that you can become a biosimilar player. It requires which requires fermentation capabilities. Like I said, India right now not so great on fermentation side. It requires handling of biological materials. Again, those are some of the capabilities that Indian companies typically do not have, large Indian companies. So Indian companies are now taking baby steps, but with the explicit understanding that in the future, everybody will have some biosimilar piece in their revenue line. But it's a very long process from here. So besides Biocon, which is already making revenues in the US market from biosimilars, there is no other company from our space, whether listed or unlisted, which is making money in US from biosimilars. So that tells you, how big the gap is. So I won't be surprised over next 3-4 years if companies say that, yes, we want to invest more on the biosimilar side. This is the business for future. So, we have to take that risk. And if we don't take that risk, then, it is, we'll end up losing the future growth potential market. But again, to summarize, I don't see meaningful revenues over the next 2-3 years, except for Biocon, from the regulated markets. But the companies will continue to be in investment stage from here on for the next 5-6 years. Some companies will have, I think, better revenues over the next, over the next 2-3 years. So they will join Biocon. They may be listed or privately held, so I don't want to take any names. But yeah, some companies will start having a meaningful biosimilar revenue stream over the next 2-3 years, except for Biocon. But I really do not expect the biosimilar revenues to become very meaningful even in the medium term. And when I say medium term, 3 to 5 years. So it's a very long-term game. It's a very, very long-term game for companies, Indian companies, pharma companies in biosimilars.
Okay, sure. Mr. Mani Shankar is asking, there has been sizable capex on complex generics by most large pharma players since 2015-16 till date for US market. When do you think they will play out, or are they still viable? Example, injectables or onco, etc.
So you're saying that, if I understood the question from Mr. Mani, he's saying there's significant capex in injectables and oncology. When will it play out?
Absolutely.
Right? Okay. Yeah. So, so Mr. Mani, I think that's an interesting question. Some of this should have played out by now, but what has happened is that in the last 2.5 years, because of COVID, the US FDA has not inspected a lot of new greenfield capacity that has come up. So that has been the challenge. Some of these facilities, as we speak, are new. They are fresh. There are products which have been filed from them, but it's just that FDA has not inspected, and if FDA doesn't inspect, there will be no approval and there can be no product launch. So yes, we are absolutely delayed on some of this facility getting commercialized, which is also affecting the ROCE of some of my coverage companies, again without taking names, but we do eventually see that versus biosimilars, some of this will start playing out within FY23 itself. That is our expectation, that by FY23-24, some of the names that you have in mind, which I presume are all listed names, and who are sitting on this new capacity, eventually within the next 6 months, FDA should come inspect, approve the facility, approve the product, and then we'll start seeing revenues in FY23, FY24 from some of these facilities, not all.
Okay. Thank you. Mr. Divik Mehrotra is asking, would PLI scheme actively help API? And as you said, distribution would consolidate. Do you think that manufacturers will focus more on it?
So PLI scheme, as far as API is concerned, in our coverage, there have been very few takers. There have been 2 PLI schemes for pharma till now, if I understand correctly. One is for finished dosage. There have been more takers for that one. The first one, which is the API scheme, there were not many takers in our coverage companies. I remember, I think there was, amongst the larger companies, there was only Aurobindo. The others, I mean, I may be missing 1 or 2 small things, but that's what I remember. I think the objective of the first PLI scheme was to reduce dependence on imports. So it was designed in a particular manner that tomorrow, if there is a geopolitical issue, we should not be dependent too much on imports for these 30 life-saving medicines. So it just focused on these 30 APIs that, right now we are 100% dependent for these on China. That should not be the case going forward. Suppose that there is a geopolitical issue that arises. So, so that was the focus of the scheme. And if you are making for India medicines, then you really are making as per WHO norms, not US FDA norms. Those norms are different. Nothing wrong with it. WHO norms are also good. I also eat India-made medicine, so there is nothing wrong with that. But it's just that the standards are different. So if you're making as per WHO norms, the large companies typically do not have many facilities which are WHO accredited. They do have, Cipla has, some of them have, but a large part of those would be smaller privately held manufacturers. So I don't think the first PLI, which is API facing scheme, which is where the question was, I don't think that will have an impact too much on our coverage. It can help. It can help because the supply chains can get strengthened. So versus if you were, let's say, too dependent on China for something earlier, even for India market, now you will have local vendors who can give it to you. So there is some supply chain strengthening that has happened. But beyond that, monetarily or commercially, I don't think it will make too much of an impact. The other question about e-pharmacies, yes, I think Indian pharma companies are focused on that as a concern. They are seeing this space, with interest. Of course, no pharma company wants to let go of the opportunity also of supplying in bulk. So we're trying to service 100,000 distributors versus just trying to, let's say, service somebody who can give you, somebody who has a $1 billion wallet every year, like Kaimed. Those are, so my preference would be to try and get into that $1 billion wallet, because I know that that's a very meaningful kind of a thing. And to get into that $1 billion wallet, I will be willing to give discount. So yeah, that I think is the but pharma companies, I think, are still looking at e-pharmacies as partners. They are willing to work. They have not shunned out any of the e-pharmacies out of their system till now, saying that we will not supply to e-pharmacy A or e-pharmacy B. That has not happened. Most of the resistance to e-pharmacies has basically come from mom and pop stores, but because that is a direct competition, clearly. So the guy who's obviously, so the local mom and pop whose business starts suffering because of e-pharmacy has every right to protest and complain. But what happened during COVID is that we saw that e-pharmacy adoption just went through the roof. People were not willing to step out of house. People wanted home delivery of medicines. In the early part of COVID, because of lockdown, even in some localities, pharma companies were unable to get the material to the final last mile. Pharmacy shops were always open, but there was material issue, there was supply issues. Because of that, a lot of people just adopted to e-pharmacies, and because of the convenience, they are not going back now. So I guess pharma companies are also trying to learn to coexist with e-pharmacies going forward. But my sense is that it will not be an easy alliance. They are at some point in time there is scope for some friction between these two groups.
Okay. Let me combine these questions quickly. Do you expect that mergers and acquisitions will change the nature and economics of pharmacy market in near future? You have already answered that, just like it changed the nature of online food delivery market. Mr. Ishan is asking. And what's the current scenario on the API business, and which company? We can't talk on the sincere apologies that we can't speak on company specific. But current scenario on the API business, you have already answered that. So mergers and acquisition, would you like to address that?
Yeah, sure, Amit. Mergers and acquisitions in which part? I'm sorry, Ishan's.
Merger will change the nature and economics of pharmacy market in near future.
Sure. So see, as far as mergers and acquisitions in pharmacies is concerned, that I think is not going to happen. 800,000 pharmacies, most of them are single standalone pharmacies. Just to give you some ballpark comparison of what we are talking about here, Apollo, which is the largest pharmacy in India, has 4,500 stores. So roughly about 0.5% of total pharmacy shop belongs to the largest guy. Now, Apollo has never acquired pharmacies. They have set up their own. So they take a shop on these, they do it as per their own specifications, and then they just start running with it. So I really don't think that on the pharmacy side, we still have attained a scale where there can be mergers and acquisitions. The organized retail will continue to take market share from mom and pops, which is obviously going to happen because they have better stock, they have better service standards. The guy at the counter is much more educated, they have much more better payment methods, etc., etc., right? So all those things. But in the distribution side, I do see that there will be some, which is the middle part of it, which is the channel or the funnel through which the pharma marketing company supply to the retail. So distribution, I do see some scope for consolidation in the next 5 years. Smaller distributors have already been bought by Kaimed, by Pharmeasy. Pharmeasy has Ascent Pharma International, Ascent Pharma Health, sorry, not international, Ascent Pharma. And Ascent Pharma goes to every city and they do 100% buyout of the largest or the second largest distributor in the city. Kaimed also does that. And that is happening a lot. We may not hear about it unless we are involved in the business, because these are all really, really small companies. And then they use these local distributors as beachheads to acquire even more distributors. So if I may refer you, you may want to go to Apollo Hospital's annual report and look at the number of distributors that they own. You'll be surprised. You know, it's a very big list. Through Kaimed, and it shows up in related party transactions. That's how you will come to know. But it's a very big list. So yes, distribution is happening. Distribution is getting consolidated. I expect that it will continue to get even more consolidated going forward. And that's the part where I see that, you know, today where there is so much fragmentation, tomorrow, tomorrow, when I say tomorrow, 5 years down the line, there will be much fewer distributors and they will have a lion's share of the market, is my hypothesis.
Okay. Just I'm taking the liberty and answering. These are the common questions. Okay.
Sure.
Is there any right level to invest? How much time we should make? What should be the time horizon? Should we invest in pharma mutual fund? Whether mutual fund is a good route to invest in pharma? So many common questions, and let me answer this. Of course, you know, pharma is one of the asset allocation is the key. No one can predict the market, but of course, in the staggering manner, one can invest in a pharma. As a manufacturer, we always advise to have 10 to 15% of one's allocation in pharma and healthcare fund. As a AMC, we have also pharma and healthcare fund, and Mr. Dhaval Shah manages very diversified portfolio around 500, 600 crores is the corpus. It's pharma and biotechnology, healthcare services, retailing, healthcare equipment. So anyone wants to build up the portfolio in the future, you know, Dr. Abhishek, whatever has said, and want to capture those trends, I think mutual fund route is one of the best route anyways for any investors. Investing in a staggering manner, you know, asset allocation 10 to 15% rather than just going and time the market. Please keep our pharma and healthcare fund on your radar. Next one, the quicker one. Can I take a liberty and ask you 2-3 questions more, Dr. Abhishek?
Sure, Amit. But let's just make it quick. Maybe another few minutes. Yeah.
Okay. Sure.
I also have a Saturday.
Yeah. Only one or two questions.
Yeah, sure.
Yeah. Kindly explain prospects of specialty chemicals roles in the drug development. Mr. Mohan is asking.
Not in the drug development, Mr. Mohan, but on the manufacturing side, specialty chemicals are an integral part of pharma manufacturing. They are the building blocks that go into eventual manufacturing of APIs. But specialty chemical is a much wider application field, out of which pharma, let's say, is a very small part. They will have application in, let's say, food, fragrances, plastics, everything. Pharma for specialty chemicals is a relatively small market. There are obviously some companies on the specialty chemical side who manufacture chemicals which have the maximum use in pharmaceutical industry. So fluorination, for example, is one of those industries. where fluorination is one of those sectors of specialty chemicals which has a much wide application in pharma itself. So yes, the fact that now we have so many Indian specialty chemical companies which are expanding their portfolio, expanding their manufacturing in India, they're doing capex. That's a very good sign. That's a very good thing for Indian pharma companies, because rather than importing these things, let's say from China, which they were used to, 2-3 years back, now there's a very good local vendor base. And I can tell you one thing: when I speak to pharma companies, they are very happy to buy local. Nobody wants to import, because last 2.5 years everybody has got taught a lesson that even if your Indian stuff is 10%, 15% more expensive, I'm not saying that it always is, but in some cases, then also it is better to buy local. Don't, just to save that last penny, don't try to import, because your supply chain issues are here to stay. The freight cost has gone through the roof, and some of these changes that have happened in the last 2.5 years, which is buy local, I think are here to stay. So clearly, specialty chemical has a very willing buyer in the local pharma companies who want to utilize more and more, from the local industry.
Sure. And this is the last one. Mr. RRM is asking, could you give the scenario for generally MNC pharma companies? Do they score to Indian companies? And earlier they were apprehensive of the patent production for the new products launch.
Yeah, so MNC pharma companies, again, I don't cover, but I'll just speak about them as a broad group. They have been slow to bring innovation to India, which is what you would expect, that they should be launching in India whatever they launch in the US or in Europe, but they've been very slow to bring innovation to India. Why is that? Simply because of the price differential. Their innovative products in the US, if they are, let's say, biologics, can sell anywhere north of $40,000-$50,000 a year. If you're talking about that kind of a number, in India, 35 lakh rupees treatment, there will be very few takers, and then it becomes a big headache for them that you launch 35 lakh of treatment, the poor cannot afford it, try to make it more affordable, and it's just too much of a pain for them for a very small market. So I totally understand that perspective, although I don't cover them. In the lack of the fact that they're not bringing innovative products to India, then they are absolutely on an even ground with the local pharma companies, right? So they have the same product portfolio, our guys have the same product portfolio, because the MNC guys who could have had an advantage by launching innovative products in India, they are not able to do so because of whatever reasons. Now, when an Indian company fights with a multinational company in the local market, the Indian company is far more flexible, he is much more nimble. He is, he can put a lot of medical representatives, sales force on the ground. So what we have seen in the last 15 years, it's a fairly long period of time, that multinational companies have continued to lose market share to Indian companies, simply because they are now fighting on an even ground in terms of product, and Indian companies can do a better job on commercial side. So Glaxo, when I started covering pharma, Glaxo used to be the number one company in India, number one pharma company. Today is fourth or fifth. And similarly, the out of top 10, there used to be, at least 4 multinational companies. Today, there is only one. So that tells you that, Indian companies, I think, are better on the commercial side, which is why they will continue to gain market share from the multinational companies. That's a simple and plain part of it. Yeah, I don't think that's going to change either.
Sure. So thank you so much, Dr. Abhishek, for giving us so much valuable information, addressing all those questions, and definitely it's a really interactive sessions. I also thank all the investors who joined us, today Saturday morning. Huge turnaround. normally, and day by day, of course, this platform is gaining popularity. Thank you so much for all the constructive feedbacks, and thank you for joining. And surely we'll catch up with you in the coming months.
Thank you, Amit. Wonderful questions. Some of them really made me think and made me think hard before answering. So thanks for those. I also learned a lot, during the session today. Thank you.
Sure. Thank you. Thanks.
Thank you. Thanks.
Bye.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।